A third would be tax planning, I guess generally. You want a professional who knows what they're doing to kind of go through your books and say, hey, just like I mentioned with the prospect that I turned into a client was, just have somebody who does this all the time, right? Take a look at your books and take a look at your tax returns. Okay, is there fidelity between the closing of your books and your tax return? So you check all these different things, one, and then two, you can look at how they're situated legally, how their entity is set up legally, right?
You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. Downloadable audio episodes can be found in the podcast link found at drawincustomers.com. We are locally underwritten by the Bank of Sun Prairie, Calls on Call Extraordinary Answering Service, as well as the Bold Business Book. And today we're welcoming / preparing to learn from Dean Vance of Vance and Associates CPA, and we are talking taxes. So Dean, how is it going today?
I am well, James. How are you? Thanks for
I'm
having me
doing
on.
very well. I'm excited. We're towards the end of April here. I guess really end of April, which is always the month of taxes. Love it or hate it.
That's right.
Uh, and I am excited to have you on the show because I can tell you, before I got what I would consider to be a business aware accountant, I have paid what I feel like is way more than I should have in taxes, and no one's ever proud of that. So I'm happy to talk to you. So let's just start with the baseline. What is Vance CPA?
Vance is such a CPA. We're a CPA firm. We're located in Bluebell, Pennsylvania, which is right outside of Philadelphia, Pennsylvania, and where it's four of us, and we do small business accounting and tax work. So we have three basic offerings: transactional, controller, and CFO services, and we have got a couple niches. One is the home care, home health niche. The other's an engineering niche. And I guess you'd say the third would be a e-commerce niche.
All right.
So yeah,
Well, that's pretty, you're clever right there to pick your verticals to
yeah,
target instead of saying we're the accountant for everyone that has money
that's right.
or pays taxes. Because,
That's
yeah,
right.
I interviewed a guy, this was years ago, and he said niches bring the riches.
Yep.
And it was interesting, that conversation with him. So I'm like, what are you talking about? Why would you cut down your potential customer base? But the more I talked to him, the more I realized this guy's a genius. And I guess that's why we do this, right? To learn stuff from people.
Yeah, and you do it long enough, James. You're in a, if you're in a location long enough, like Eskimos have what, 10, 15 different adjectives for snow? We've got
Mhm.
two, right? Yellow and plain, right?
Yeah, right. Huh.
Um, so the longer you're in someplace, if you remember the book The Wealth of Nations, right? Adam
Yeah.
Smith,
Yep.
he had the needle factory example of economics, if you remember that, and the thing is, I mean, you spend more time in one place, your learning curve just kind of goes like that. If you don't, your learning curve is kind of flat.
Hmm.
And so to your point, yeah, riches are in niches. Absolutely.
I love it. I love it. So, how long have you been in the CPA game?
I got my CPA in 96.
Okay.
So, it's been for almost 30 years.
All right.
Yep.
And tell me about being a CPA. Is it common? Like, I see a lot of CPAs that are just one person shows.
Yeah, yeah, yeah.
Is that common to go down that road like a chiropractor, or are most of them working for companies and just a handful of them are owners?
I think most, in terms of numbers, I think most are probably in the government and in
Oh,
Fortune 50, Fortune 100 companies. They're working for companies, and then some entrepreneurial types, are have their own business. Like, I worked at a CPA firm when I had gone to, I was St. Joe's undergrad, went to Drexel grad school, and actually I was going to get a master's in taxation. I was bored out of my mind. But anyway, I went to a local CPA firm, worked there for a season, and then worked with Tasty Baking Company, the makers of Tasty Cake, if you ever heard of that.
yeah.
They're actually Pennsylvania based, kind of like Little Debbie's in a sense, got all kinds of little, cakes and so forth. So I worked there for about 4 years, and then I got tired of being there. And even my manager said, "You're kind of." She said you're kind of a what did she say? She said you're kind of a partner type. You have that kind of vibe that you're, of a lot of the partners. that, and so I left there and I formed my own business, after 4 years. And, first I just started doing tax returns. People needed tax returns. And then from there, it just kind of grew, And
All right.
but yeah, but to your point, yeah, I think most CPAs are one person shops. They might hire tax preparers during tax season, but most CPAs who are on their own are one person shops.
So tell me a story just about the mindset of a CPA. Because from my point of view, this seems like crazy boring. But most of the people that I know, they're in the CPA industry. They're like, how do you not understand numbers? How do you not?
That's right.
So I just want to try to wrap my head around understanding the mindset of a CPA.
Yeah, well, it depends, right? So it's like I would say I'm an atypical CPA because I am a big picture CPA. A lot of CPAs that the traditional kind of what's the word, stereotypical CPA is very kind of quiet, very neat, not one hair out of place and all that kind of stuff, and very predictable kind of personality. And but ultimately, CPAs, some of them, I guess the more extreme types you would say would be kind of on the spectrum, right? Where they have the ability to block out things and zone in to the matter at hand. In the matter at hand in the CPA field is to really intuit what the numbers are saying, right? You take a look at a business, so you're tracking the business's movements, right? And those trackings, those fingerprints are in the flows of cash, right? So cash comes in, goes out, and then promises come in and go out, right? So if your cash basis is cash, it's generally cash, right? Cash comes
Mhm.
in and goes out, and you're taking a look at the business. Okay, you're taking a look at, what cause and effect you have in the business. Okay, so you have an effect in the financials. And the financials, for the most part, the financials are lag, what they call lag measures, right? So it's the effect of something that happened before it, right? So after a while, a CPA gets good at, okay, here's what you have as a result. How did we get here, right? And then if you can find out the seeds that went into the ground at a particular time that had this tree bud and had certain number of apples pop out, then you're like, okay, so if we want these number of apples to pop out, we need to plant these seeds over here, right? So a good CPA gets in a relationship between the cause and effect of the business, what the business is really doing. And again, that shows up in the numbers. If you're tracking numbers, that shows up. Now, the lead measures, you got lag measures and lead measures. Oftentimes, the lead measures are what they call non-financial, right? But they're inputs, how much labor, what kind of labor you're putting in, what kind of supplies, that kind of thing you're putting into it to get to a lag measure here. So a good CPA knows that. A good CPA, I would say, is familiar with a particular industry. They're familiar with what's called a KPI, and KPI are key performance indicators. So they know for certain industries that there's certain KPIs that are more important than other KPIs. In service industries like I'm in, CPA firm, the important thing is getting good labor, right? Getting a good person to work for you, right? So anyway, just to answer your question, yeah. So that's what a good CPA would do. A typical CPA tends to be, again, very steady and conscientious, very hardworking, very detail oriented. Yeah.
All right. That makes sense. Tell me, so I guess it didn't even dawn on me because from my point of view, CPI is just a person that does taxes.
Right, right, right.
I
Sure.
guess I didn't realize when you're talking about these larger companies, they're crunching numbers in all different directions for all kinds of reasons
Yep.
that probably I imagine the great majority don't have anything to do with taxes directly. Is that safe to say?
That is safe to say. There are a lot of accountants. You call them management accountants, right? I mentioned KPIs and different metrics like that. You've got liquid ratio, quick ratio, that kind of thing. Those are management accountants, and they're looking at the cause and effect dance in the numbers, right? And they're looking at, so they'll be in a Fortune 100 company. They'll track how they're doing versus maybe their competitors, other Fortune 100 companies that are in the same space that they're in. They'll track, are they the same? Are they below? Are they above? That kind of thing, right? So, and there are a lot of CPAs that don't want to do taxes, frankly. I mean,
Oh, okay.
yeah, I mean, in the last I'd say 10, 15 years, I remember being at a seminar years ago, this group called Tax Coach, right? So they train CPAs to do tax plans, right? And I remember the guy, Ed Lyon, as the head of tax coach, he had this PowerPoint presentation, and he showed a slide of a dinosaur looking over its shoulder, right, like this, and seeing a meteor coming down, right? It's like, he's like, "Hey man, this is the tax world. If you got to get out of the way, or you'll be extinct."
Oh,
So a lot of us moved away from just doing taxes. I mean, I moved away a long time ago. I would say within the last 20 years, moved away from that to getting into accounting, monthly accounting, and tax planning and tax management, tax mitigation, that kind of work, which is much more
gotcha.
exciting. Yeah.
So it's interesting because I can tell you, as a small business owner, I've owned a few businesses, and it wasn't until recently that I realized the value of having somebody look at your books more than just once a year when you give them the pile of paper. Here's my P&L. Here's my whatever software file. Go just tell me what the damage is, kind of thing. And having somebody look and, like you said, saying, well, we got, why was this month higher? Why was this month lower? And let's figure out how to avoid the low months and how to build upon the tall months, make them even taller, and rinse and repeat and learning from them.
Yeah.
And it's so weird to me that I was so ignorant to not think that somebody can look at those numbers and actually tell a story so that you can figure out what do you do in the future
Right.
instead of just like hope it's good.
That's right.
Good
That's right.
luck.
Well, yeah, you're talking like, so you're that bias, James, is a lot of people have that bias. It's compliance, right? Because you have to comply, right? You have to comply. So there's a compliance utility to doing all the accounting and all that. But there's also a management accounting utility, which I referenced earlier, which is, it's almost like, if you could imagine, your numbers going into the therapist's couch and talking to the therapist. How you
Love
how
the
you
analogy.
yeah, how you doing? How you feel? You seem a little tired. Yeah, yeah, so many orders, and we can, there's so many orders, but we're net 90-day cash, so we're dying here. I'm all tapped out. I've asked the bank for a bridge loan, and it's just killing me. That's why I'm so tired now. That kind of
Tell me more.
thing. So, so you have that, but yeah, so the good part is the management part, because that's the part where you can create, right? That's the part where you can talk about the future. You can do forecasting, right? Cash flow forecasting, and looking at, like I said before, about the cause and effect, right? That kind of dance, and actually kind of really going into your history and understanding, one is your underlying business model, right? What you're selling, and then how it's sold, and looking at the cadence throughout the year. Is it a seasonal business? Can you flatten it out? There's times where it goes down. Can you bring another product in to level it out? Things like that. That's the exciting part of it. Because, I mean, because you're dealing in the unknown. It's almost like the realm of, it's almost like mystical in a sense, because you're dealing with something, but you have enough, there's enough elements in present time to tell you, and history, to tell you what it's going to be, next quarter, next year, by the end of the year, that kind of thing, right? So you have enough information from your books because it tells you a story. And
Yeah,
if you dig in enough, it'll tell you a great story, and you can manage yourself better that way.
I love that. I love also saying like, hey, we're down. What are some options to
Yeah.
bring it up seasonally? Like every December you're down. What can we do to bump that up so you're just not hurting every December? Whatever. That's
Yeah, and I'm sure they're chock full of stories and history of different companies that had those issues. They have to find something, and then they bumped into something. It's like, oh my God, this is crazy. So it's
yeah,
crazy
I
good.
love
Yeah.
it. I love it. We have a client that we answer phones for that does fireplace repair, installations and all that kind of stuff, and they just added on roofing, which I
Oh
thought was a
yeah.
genius move. Because we're in Wisconsin where fireplaces are burning bright. Let's call it 5 months a year.
Hmm.
But the summer beautiful months when it's 80 degrees outside, nobody cares about their fireplace.
That's right. That's right.
But you get in hailstorms and stuff, they probably care about their roof. So I thought that was a very clever move. You got your guys, now you got work for them. It's not just sporadic.
That's right. And
So,
James, that reminds me of locally here, we got a couple snow mountain ski resorts, right?
mhm.
And in the summertime, they just turn them into, like water parks. They
Oh,
just
really?
yeah, they pull out yeah, of course some of the equipment's going to be there all year, but they cover it up and they'll put water park stuff in there. Yeah, it's pretty cool.
Huh.
It's
That is
pretty cool.
clever.
Yeah,
Instead
yeah,
of just being a barren hill for
exactly.
whatever 6, 8 months out of the year,
That's
trying
right.
to get some use out of it. That's smart.
That's right.
I love that. It reminds me of a. I used to be a concrete truck driver. I mean, we're talking crazy years ago, and not for very long, because that's a tough job that you don't get paid anything for. But I remember we would get paid, or you never know when you're done. Like you're done when the orders stop coming in.
Right.
You drive in to refill with your concrete and stuff like that, and if your number didn't come up, or I guess when the number stopped coming up, then you know to park your truck, kind of thing.
That's right.
Sometimes it was 5 at night, sometimes it's 9 at night. You just never know. And I
Got
would
it.
ask the guy, like, what's the deal here? How come we can't schedule anything? Because that
Right.
makes it very tough as an employee. And he's like, when that, whatever, $250,000 truck is parked there, it's not making us any money.
That's
So we
right.
want that thing to be going as often as possible. So we're going to squeeze everything we can out of it. And what he forgot to mention just is that it's at the expense of the employees and their social life. But
That's right.
But I was like, that's fair when that thing's parked. It's no better than a rock.
That's right.
So I
That's
get it.
right.
I get it. So you've been doing the CPA thing for a long time.
Yep.
Tell me, I want to ask you about the when you were working at Tasty, because it's a curiosity thing. And you mentioned that you weren't really a big fan of that. Was that over the
Well,
course of time you're just stuck in this cubicle kind of thing and you're like,
yeah,
there's more to life?
it was actually Tasty Cake was great, actually. It's funny. I had I was in my God, my younger years, and I remember I had a roommate. My roommate and I on Fridays I would get Tasty Cake cakes. We'd come home, we'd have cakes and beer on Friday, right? So
Nice.
a lot of gas over the weekend. Just I'll leave it at that. But Tasty Cake was interesting. But it when I was there, I realized that yeah, you have a lot of that cubicle stuff, right? Cubicle going through the numbers, that kind of thing. And temperamentally, I wasn't quite there. I could kind of downshift. I call it downshifting to being able to do that. But I found that I remember there was the head of PR at Tasty Cake. She always had all these different nonprofit like dinners and award dinners and stuff like that, and nobody ever went to them. And she started giving them to me. I started going to them all the time. I loved it. It's like this is cool. I love this is
Nice.
but it spoke to my temperament that I like that kind of that mixing up and stuff like that, going to different places, shaking people's hands. Not quite like a politician, but almost, right?
No, he's
Yeah,
schmoozing. I get it. The
yeah,
business
kind of
world's got to be
schmoozing.
done.
That's right.
Yeah.
Kind of schmoozing, and I realized that I remember being there. I remember people in the accounts payable department. They were like, "I gotta get out of here." One day I'll get out of here. And I just said, you know what? Let me actually get out of here. So I left there, just started my own business, and I remember coming back a year later. Those people were still there. I got to get out of here, Dean. I got to get out of here. And
It's
you
on
know,
the 20-year plan, right?
yeah, right. And it's. I remember my uncle, who had his own business. He had an insurance company in Philadelphia, and he told me. He said, when you get your own business, you learn things that you couldn't learn unless you had your own business. And he said you're going to go through tough times, but you want to go through that. You want to go through the bad stuff quickly. I remember him telling me, right? So you want to go through it quickly as possible, keep your overhead low, save your money, and get out there and just really meet people. So anyway, yeah, I hope that answered your question.
Yeah,
Yeah.
absolutely. Tell me more about the temperament because you mentioned that a little bit.
Yeah.
And I guess in my head, temperament, I can remember working for a boss that was what I'll call a yeller. There might have been a couple chairs thrown and by him. And I remember just watching him go what I'll call psycho, thinking there's nothing that we do that is that important.
Right, right, right.
Like we were fixing printers.
Okay. Yeah, yeah,
It
yeah.
wasn't like we're not an ambulance company or something like that and somebody turned wrong so somebody died or anything. Like Some of these documents didn't get printed. Like it's a big deal, but it's not that big of a deal.
Not that big. Yeah. Yeah. People like that are drivers, I guess, right? I'm not, I don't know, but people like that, they're probably, a-holes. I won't use the
Oh,
word, but
no doubt, no doubt. He was capital A, man.
a-hole. And I don't know if he was the owner or just the manager.
No, it's just a manager.
Yeah. But the owner appreciated that this guy got results, right? And
Yeah, yeah. I
probably,
guess in
right?
that specific case, I don't know that he got results. We had a lot of
Okay.
turnover there. A
Okay.
lot of
Got it.
turnover. So,
Well, he might have been
yeah, but they
he
were
might have been
drinking buddies, so that probably
a,
helped.
well, he might have been a misfit for that. But yeah, I
Yeah.
mentioned temperament earlier. It took me a while to really see that because I came into the accounting space. My uncle told me to go into accounting because I had, for some reason, I was at St. Joe's University and I was pre-dental for like one semester.
Oh, really?
It's like
There's
what
a
the
shift?
yeah, it's like what the heck was I thinking about, right? I mean, I just remember going past the science building, which had all, biology and chemistry. My blood pressure would go right up every time I walked by there, right? So I remember going to see my advisor. My advisor said, "You should try accounting. Accounting is what did he say? It's quantitative, like pre-dental is, but it's." And I tried accounting, and I got an A in accounting. I liked it. It was debits and credits. They balance out. They have to equal debits have to equal credits, right? Thanks to Paco Luco or something, the guy who founded Double Entry Bookkeeping. But it was very logical. It wasn't subject to. It wasn't like psychology, or sociology or politics. It wasn't anything. It was what it was. It was very fact based.
Hmm.
Here's a trans. It's very mathematical fact based, and and so there was a certain comfort in me for that. So I went into that. Plus, my uncle said, "Look," because I didn't know what I wanted to do. He says, "Look at the one ads, right? Like, and this is back in the post Reagan era, I guess. And look at the one ads. It's like, it's like 2 pages full of accounting, 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 accounting." And so I was like, "Okay, cool. I'll try that out." But I must say that coming into it, I went to a small CPA firm in Philadelphia. I really didn't like it because it was because the temperament was for what I would call CS. Now, let me just kind of back up for a second here. When I mentioned temperament, it's kind of like Myers Briggs, kind of these behavior profiles or
Oh, sure.
personality profiles.
Yes, and things like that.
Yeah. So the one that I like is the DISC or DISC profile, right?
Yeah. Big fan of
You're
that. Yeah.
familiar with that, right?
Oh, yeah, very.
So my profile was a high DI, right? So I'm a dominant influential, right?
Me too. It's all good.
Are you really?
Safe place. Totally. Absolutely.
And you're mechanical. My God. Okay, that's interesting. Okay, cool. Well, well, you know what I'm talking about then. So the dominant influential, I'm partly task facing
Hmm.
and I'm partly people facing, right? So when I found out about my disc profile and I had somebody explain it to me and all that, a lot of questions were answered for me, right? Because the space that I'm in as an accountant was very like a CS bias, right?
Totally. That's why it's
Yeah,
interesting you say DI because I would assume C, but then you're on a podcast, so it can't be 100% C. There's got to be something else in there, your IRS.
that's right. Yeah, yeah, so I'm a high DI. I remember the guy who did he did my chart, I guess you call it, right? He did my son's chart. Uh, my son's a high DC. So my son came on around beginning of COVID, right? And he came on because he had worked, he was poli sci undergrad at St. Joe's, and his mother wanted him to go to law school. He didn't want to go to law school. And I had to tell him, says, look, my karma is my karma. Don't, everybody has their own karma. If you don't want to go to law school, don't go to law school. You know, you can work for me because he was looking for some place to work at. He had been in real estate management for 2 years. He hated it. It just wasn't, lockouts. You're on call for lockouts, the pipe freezes, the whole nine. Right, you got to run to people's places. So he worked for me for about a year, and anyway, to answer your question, so he's a DC, so he's a dominant conscientious. So he's got two task facing. She's very task facing. And so after a year, he was interested in coming on. I was like, hey, I'm going to train you. We're going to spend some money to make sure you get trained, so forth and so on. And it took about 2 years for it to really kind of kick in, all the training and all that. But I told him, I said, look, you're naturally more attuned to this than I am, right? You can actually do the work. I'm probably better with more big picture stuff, which you can do it in the CPA firm. You don't have to do all the crunching yourself, you know. But that I would, but that you have a higher gear for this work than I have. The actual work, the actual production work, you have a higher gear than I have, right? I can take it so far, but anyway, you got my point,
Yeah,
right?
totally, totally, absolutely.
So, so I guess after about 2.5 years, it started to kick in. So all the training, all the investment into him started to kick in, and he started to get to that higher gear, right?
Nice.
Very, very appropriate with clients where, because I'm a high DI, I would take things personally in a way that he didn't take personally, right? Just like
Pure logic,
yeah,
no
yeah,
emotion, right?
yeah, very very logical, very very appropriate, that kind of thing. But again, I had a lot of experience. I helped him with some things and all that. And we got two people under Kerry. So he's got a CPA and a bookkeeper under him. Now I specifically, because for me as a DI and him as a DC, we needed CSs to balance out, right? High SC or high CS would balance out the team. And I actually tested for that and I hired for that and it's played out perfectly, like
Nice.
beautifully. The way my son's name is Kerry, the way he says, Dad, you get the business, just stack it up. And that's the way it's been. And he's like that. I could just give him more and more cases to do, and it's like not even an issue. It's not even an
Just
issue.
right there.
It's right there. So
That's cool.
yeah, that's why I really believed in the temperament thing. You really can't go to school for temperament. You know,
No,
you,
no,
you
my
you
goodness,
have it.
no.
Yeah. Well, yeah.
Yeah, I was told by there's a guy that bought one of my businesses, and we were talking about employees and all that jazz. And he said, what was his rule? No projects. He's not, he's like, you can never fix an employee's personality.
Right. Oh yeah,
You can
yeah.
train them and you can teach them skills, but personality is something that you will never change. So, and even if you could, you wouldn't want to go down that road. There's other employees that are available. So just
Right,
no
right,
projects. And I can remember hiring people where I'm like, you are sharp, but you're kind of, I don't, you're not very, you can't talk, or you have some other personality issue that I'm like, all we got to do is tweak that. And that is a terrible position to be in. To try, like, all you have to do is change your personality and you'll be a perfect employee. You're loyal, you show up, you're on time, you do the work well. People hate you, but you're so good in all these other areas.
right. That's right.
And I learned the very expensive hard way multiple times that you just hire for personality first, the rest you can fix or
Yeah,
teach, I guess, as far as that
yeah.
goes.
I agree. That's a very good point. And I guess being a high DI, that wasn't a problem for you, right? To get that as a
Yeah.
yeah,
Yeah. I guess it didn't take too many bad hires where you're like, you know what? This isn't working. But then you hire for personality first and it worked out really well.
yeah,
And I guess it also helps culture of the business
yep.
is way better when you have nice people rolling around. The challenge then is sometimes you have to deal with people, like you said, you can't be good at everything. So the really nice person, super awesome at her job. She just has a really hard time showing up all the time. So sometimes you have to deal with that, um, where you have to change people out and all that jazz.
hmm
But
hmm
overall, hiring for personality first has been I would say a game changer for my businesses.
Yeah, I
And
would say I would say the
yeah,
same for yeah.
I don't know. I don't. Does anybody say that? I don't know if I've read a lot of business books, and I don't remember any that said hire for personality first. But maybe they're out there. I don't know.
Maybe I remember um I think of Dan Sullivan. I don't know if you know Dan Sullivan, coach, business coach.
I know the name. I can't. Did
Yeah.
he write a book? I can't
Yeah, he
place
wrote a
it.
couple of books. He's read a
Okay.
bunch of books. He wrote one called Who Not How. which is pretty good.
Okay, I've heard of that book. Yeah.
Yeah, Who Not How. It doesn't really tie in exactly to what you said, but it's kind of similar to that in terms of temperament. But I agree, spot on, James. What you said about you, I'm the same way. It came painfully to that realization that I hire for personality or temperament first. They can always learn the other stuff because the other stuff, if you hire the right temperament, you're not teaching them Greek. You're
Hmm.
teaching them their own language, but maybe more words in their own language, which they'll naturally pick up.
Fair.
So,
I love
yeah.
it. Let's shift gears and talk about taxes and some of the, we'll call it the problems, issues, lack of awareness that some of your clients or just small business owners that you've come across, where you're just like, oh boy. Let's just talk about, let's say, top three challenges that you've seen or mistakes that you see small business owners make in the tax world.
Okay, so let me look back on okay, so there was a new client that came in a couple years ago, I remember, and one of the things that we typically do is like we'll just look at their, last filed 3 years tax returns, right? And as you know, James, you can go back 3 years, generally go back 3 years and amend somebody's tax return, right? So we just, it's a service that we do. We don't charge for it unless we actually amend a return. And I tell either clients or prospects, I say, look, you'll have a professional firm look over your books and give you a thumbs up if everything is fine. And if it's not fine, that's great because we can find and fix it, right? So I remember a couple years ago we had brought on a home care business that when I reviewed their tax returns, I'm looking at their numbers. I'm like, okay. I said, could you give me the QuickBooks, your QuickBooks file, your accounting file to this particular year? Took a look at that, and they had a bunch of uh, deposits. Like whoever did the books, the neighbors, cousins, nephew, or whatever, whoever did the books had included PPP loan money and top line sales and other loans. They just took whatever was deposited in the bank and called it sales. So, I remember, God, I'd say about 2 months ago, my client calls me up. She goes, "Hey, I got a check in the mail. It's $98,000. Thank you so much." And so you have that. So that's one error, I would say, right? Just assuming that if it's a deposit, it's revenue, and it's not. It could be your own money. You could add a loan from your Aunt Alice or something and put that money in. That's one. I'd say second thing is just really not treating, and we talked about this earlier, but not treating your accounting like for management accounting purposes, right? Not treating it like a cause and effect. Um, and then I would say third would be tax planning. I guess generally, you want a professional who knows what they're doing to kind of go through your books and say, hey, just like I mentioned with the prospect that turned into a client was, just have somebody who does this all the time, right? Take a look at your books and take a look at your tax returns. Okay, is there fidelity between the closing of your books and your tax return? So you check all these different things. One, and then two, you can look at how they're situated legally, how their entity is set up legally, right? Uh,
Okay, you're talking LLC, S
yeah,
corporation, stuff like
right.
that.
LLCs, partnerships, corporations, that kind of thing. And with an LLC, you can elect that to be an S corp. Yeah, there's a process by which you can do that. But you want to you want to take a you want to take a look at the client's books just to get clean, get them cleaned up. And we typically do that. We just finished a onboarding about a week or so ago with a new client engineering firm that came in, and you're finding how they're doing things. And it's kind of like kind of haphazard often, and it doesn't have to be haphazard. So cleaning your books, getting clean books, looking at your books, I would say on a monthly basis, whether you're a transactional client, controller, or CFO client, you look at your books and you have somebody who goes through the books and have a conversation about your books. Have a conversation about, okay, you're exposed to this much tax, you're making this much this first quarter. We got a payment due on, well, there's a payment due on 4/15, but then there's certainly a payment due on June 15th, right? Let's see where your profile is. Okay, how much you need to put away. And we're here in Pennsylvania, so here would be how much do you put away to the IRS, how much do you put away to the Commonwealth of Pennsylvania. So looking at the numbers, making sure the numbers are correct, making sure that have a strategic plan because you're whoever you are, you're in a particular business model, right? Looking at the numbers, especially I'm saying cash basis, especially if you're using accrual basis. Accrual basis is more lined in with what you're actually doing, right? So cash, you finish a job or whatever, you'll get paid that day or 60 days down the road, right? So that's not a great gauge of your top line revenue. What is a great gauge of your top line revenue is your billing, right? And that's accrual. You get into accrual basis that way, all right? Um, so keeping an eye on your money, the more you look at your money, the more you develop a relationship of cause and effect, right? If you, like my mother told me years ago, she said, because I used to always complain around August, my money went down, nobody was paying their bills, everybody's on vacation. So I'm sitting there stewing because I know they're on a beach somewhere, spending the
While they owe
money.
you money.
That's right, and they owe me money, right? And she said to me, she goes, well, if you know that's the case, every year, Dean, just make sure you shore enough money away so you're not worried about that. It's very commonsensical, right? Um, but yeah, getting into an intimate relationship with your cash flow, what you're doing, and finding a very competent consultant, accountant, CPA to look through your numbers with you and bounce things off of you. Because there are things that we have a prefrontal, we have a limbic, right?
Mm-hmm.
Your prefrontal and limbic, you're thinking they're both in your head, so you should know what you're thinking, but no, oftentimes you don't. Unless you get a journal and write down, you go, oh my God, is this what I'm thinking about right now? Yeah, this is what you're thinking about right now. And so meeting with your accountant on a monthly basis is something similar, right? And the way we do it's like we probably spend about, I don't know, 10, 15 minutes going through the financials if we have a financials meeting. And then the rest of the time, I mean, even on my transactional clients, it's supposed to be just financials, but even, if we've got extra time on a monthly basis, we'll kind of go into the underlying business model, new opportunities, what's happening in the market, that kind of thing.
Nice. So you're the business owners that you run into or that you work with, the majority of them, are they meeting with you on a routine basis throughout the year?
Yeah. So we have we have some businesses that we they're smaller. We do them at the end of the year kind of thing. But if they're transactional, like the introductory service is a transactional, right? So transactional service, typically we meet once a month. So, typically we go through 4 weeks of onboarding just to kind of catch up their numbers, just kind of, make sure everything is proper and so forth. And then they choose a particular cadence. So I said, look, we're meeting once a month. What's your preference, right? So we do, was it Monday, Tuesday, Wednesday, Thursday, Friday? What's your preference? What time is it better? In the morning, afternoon, what's better for you? And which week? Typically it's the first or second week, right? And it could be the third, depends. If it's transactional, it really could be any week, right?
Mm-hmm.
Typically the first, second, or third week. If it's a controller client, we meet twice a month. So with a controller client, the first meeting is a pipeline meeting, and then 2 weeks later, there's a financial statement meeting. But typically, we'll meet on a Zoom call, and some people may want to do a Teams call, although for the most part, it's just a Zoom call.
Sure.
We look at their numbers, and we just, we kind of dig in because during the I guess the discovery call, when they're a prospect and they call in during the discovery call, and then maybe the second, what I call the strategic call, we've kind of find out where they're at, where their pain points are, like what their issues are, right? And after we catch them up on the books, we have a template to use when we come and meet with them. And it could be anything. Everybody's different, right? Some people are very much on top of things. Some people are not, right? So
Right. Oh, yeah.
you know, it's like I Carrie going, "Hey, Dad, I've been trying to email them to get this information. It's not coming over." So everybody's different, but typically we meet on Zoom and we record the meeting, and then we have a transcript of the meeting. So typically, most of the times, clients, every now and then they'll say, "Hey, can I get a copy of that?" Like, no problem. Here you go, right? But
Mm-hmm.
for us, it's great because we get to find out exactly what's going on. What we talked about. We got a transcript right there, And then it's a great place to go just to kind of, memorialize all their needs, wants, that kind of thing.
No, I get it. I love hearing that Carrie said something about wondering why, how come this client's not responding, kind of thing. Because
Yeah,
even though you're working with them, you're working for them, and you know that, or they should know that their response is actually helping you help them. We run into that with our clients with a call answering service, and you'll ask them a question like, "Hey, we just need clarity on this little thing," and like at least in my head, this is going to take you 30 seconds to give us a response that's going to help us serve you way better. And they flake. You got to ask them 20 times before they're finally like, "Oh yeah, just this, whatever."
that's right.
I'm like, I understand that you're busy, but I, even if you just give us a call while you're on the road and just answer that question, I'm certain that you could find some time to help us out. Because in the meantime, we're just like, what do we do now?
That's
kind of
right.
thing.
That's right. And
So,
that's, yeah, go
go
ahead.
ahead.
I'm sorry. Go ahead.
No, no, no. It's just interesting, or it's actually helpful for me to hear that it's not exclusive to us.
Oh, no, no,
It's
not at
happening with
all.
other businesses.
Yeah, it's funny. I was talking to Carrie the other day, and I said, "You ever call like your phone company or your cell phone company, whatever, and you're pissed off about something, and you get that very sweet person, like,
I can't be mad at you.
halfway through the call, I know I'm wrong. I know I'm the one who's that guy, right? But they're so, oh, Mr. Vance, we're so sorry to hear that." And I'm like, I could probably fake that for a while, but after a while, like I can't fake it anymore. But getting the right person to do that, and that's something we're looking at for this coming year, getting the right admin help because Kerry shouldn't have to do that. He does that. He's a high D like me, and I know. And what's interesting in our office because he's a high D and I'm a high D, I strategically made sure that he worked out of the office for a couple days, right, at home.
Otherwise, butt heads.
Butt heads, man. And I had worked with was a CFO training company. They were a CPA firm, pretty large CPA firm, a couple years ago. And one of the partners, there were two guys. One of the partners, Adam, said to me, he said he was a high DI, right, and that the other guy was a high ID, and so they butt heads, right. But he said to me, it's like he gave me permission to be myself. He said, he goes, I'm a high DI. I don't need to be anywhere near production, right? Never forgot that. And so, Gabe, because I think high DIs, we're very ideographic, right? We got big ideas and It's hard to take that energy and just kind of downshift down to calling Mrs. Johnson because she hasn't uploaded her W-2. It's a hard
Yeah.
kind of shift,
Oh, yeah.
and you can fake it for a little bit, but then it slips out. Then your high D slips out, and then it's not, and I can't afford to do that. So
No, 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 no. You get in trouble.
you get in trouble.
You get in
Exactly.
trouble because you say something that's a little too honest.
That's
Correct,
right. That's
but too
right.
honest. And people don't always want to hear that because I don't need to put 10 cups of sugar on this thing. We're like, you got to do this. Just do this. And they're like, whoa, whoa, whoa. Where's your empathy?
That's right.
Like,
That's
empathy
why.
costs money. We don't have that
That's
anymore.
that's why I said get that high CS or SC person
Yeah.
to call, and they can just the person could just like this, and I'm so sorry that you feel that way. It's like,
Hmm.
you
You know,
know.
it's very interesting that you mentioned that the disc thing. So I had my crew take the disc test, and I was under the impression that the majority of them would be SC, maybe IC. Almost every single one had high D, and either S or C is a secondary thing.
Okay, cool.
It
Yeah.
surprised the hell out of me because I'm like, D on all these nice, kind, very detail driven.
Yeah.
I
Yeah.
don't know where the D portion is coming in. It's completely surprised me.
Hmm.
S and the C totally understand all day long. But the D,
Hmm.
I'm like, huh, interesting. How can we use this?
How can we exactly? Yeah, it's funny because we had Bianca, who we hired 6 months ago. Um, I looked on her chart. She was a CS, but she had a little. high, I think a little bit over, about a little bit more than average D, right? Which I remember talking to my son about it. He's like, because we don't need any more D. We've got enough D energy in the place, right? And so, but it wasn't high enough where it would butt heads with us, but it was high enough where she would take initiative,
All right.
and it's worked out that way with her. Very detailed, very good, not shy about speaking up about different things. And we told her, said, hey, we're not. If you can do it better than we're doing it, by all means, let it, just do it.
Yeah.
So
That
yeah,
is that's an interesting thing when you are in the culture of the business. You have to constantly do this, I've found, where you remind the employees that if they feel like we're doing something wrong or not very efficient or something like that, by all means speak up, because there is
absolutely.
no point in time where I know everything about
Hmm.
everything. No way. No way. And you're on the front lines. So instead of you hanging out getting drinks with your friends saying like, "Oh my gosh, James is such a moron because we do this," tell me and we'll change it.
That's right. That's right.
It's costing us money if we don't. So
Amen.
I'd rather
Amen.
be much more efficient than just be like, "Oh my gosh, that James guy. Ugh, can you believe it?" Tell me about the tax strategy and
Yeah.
tax strategist, because I just
Yeah.
learned that this was a thing in my head. Every CPA that does taxes was a tax strategist, and I have learned very expensively that that is not the case.
That's right.
That there are CPAs that just fill in the blank with the paper that you gave them, and there are others that make suggestions, ask questions, really look at the numbers and see where do these come from, how can we make them better in the future.
Right.
So just tell me the difference between those.
Yeah. So you've got the check the box kind of CPAs, and they check the box and they're within the box, right? And so, unfortunate. Well, I shouldn't say unfortunately, but they're in the box, and the Internal Revenue Service has their particular codes and all that, and a lot of CPAs, oh, I don't want to raise any flags. Like, I mean, if there's a difference between you and the IRS, you can go to tax court, you can go to district court, and sometimes you'll win. It's like it's not. I mean, if you've got a good case for it and you're within the bounds of the law, you may be aggressive to a certain extent, but and you may know some things that a lot of CPAs don't know, which is some of the fineries of the law. Then you should take that position. So I would say, so you have those people who tend to be within the box, and they tend to probably be temperamentally in the box, right? And then you've got some people who are kind of outside the box, and in the CPA space these days, the growth is happening from people who are outside the CPA box, outside that temperament, right? Which I think happens just generally in the world, right? You're outside of that particular box. You're outside the orthodoxy, right?
Hmm.
Because they've been doing this forever. This has to be the way it has to be done. Not really.
Otherwise, you're commoditized.
Yeah. I mean,
And
look at
I imagine in the
yeah,
case of tax code, so much of it is what I would consider to be gray,
yeah,
or or I guess I'm thinking of specifically with real estate. I just learned about segmented depreciation,
yeah. Call segregation.
cost segregation. Thank you. And like I just learned about that maybe last year, something like that. And it was one of those, wait, what? What is going on here? And
Right.
that was never mentioned by other CPAs that I've had. And it wasn't conversation like dinner conversation or going out for drinks conversation. There's all these little nuances in the tax code that you're like, wait, what? And I joked with my CPA. I was like, I feel like I'm playing Monopoly, and the book of rules
Hmm.
is this thick, and no one has read it all. Everybody's got their own page, and they're like, this is where we fit. There's a Cliff's Notes version that's being passed around, like roll the dice when it's your turn. But outside of that, nobody knows all the rules.
Yeah,
So it's those CPAs that are outside of that box that are like, whoa,
yeah,
whoa, whoa,
yeah.
page 57 here, you can pay your kid to work, or
It,
things of that nature where you're like, what? I didn't know that was a thing.
yeah. What's interesting, you bring up a very good point, James, that when you're in the orthodoxy, you don't really think. You're just in the orthodoxy. It could be an architect, it could be a CPA, it could be an attorney, a doctor, a physician, surgeon. You're just stuck in this orthodoxy. It's just the way it is. And oftentimes there are people who are not in the orthodoxy who are so dumb and disconnected that they'll ask the most stupid asinine question, like, why does it say voluntary compliance on the tax return? Right? Like, and then the orthodoxy goes, "Oh, you never talk about that. That's a silly question. You don't talk about that, right?" But it's the people who are not part of the orthodoxy, who are outside the box, that ask those quote unquote silly questions, that actually dig into, well, 99% of this space has been following a fallacy about things, right? And to your point about the cost segregation for real estate, yeah, that's huge, right? That's a huge. I mean, so if you got commercial real estate, that's 39-year depreciation. You get an engineer to come in there and say, hey, half your building is really, 5-year property, and you can do a section 179 on that half that building. You can write that off that year. It's like, you know, I mean,
Right.
in terms of, there's a bunch of tax strategies. By the way, the Internal Revenue Code's got, it's got red lights and it's got green lights, right? So some things stop you, and some things say, you can come on, keep coming on, that kind of thing. And one of the things, there's a strategy called a leveraged medical supply deduction, right? Where this is kind of like one of those exotic kind of things where you can buy into a limited partnership, and you've got these promoters that sell these because it's in the code, right? I'm not really sure the code name, right, or the code number right now, but it's meant for social purposes and getting nonprofits, this kind of thing. But you can buy, say, 20%, not a 20, well, you can, whatever the percentage stake is in particular, limited partnership, for, let's say, for 20,000, and you get $100,000 deduction for that, right?
Oh, wow.
Yeah, yeah. And if you're in a 37% tax bracket, you're talking some real cash here.
Yeah, you'll trade that all day long.
Yeah, that's right. Absolutely. You're in a 37% tax bracket in Pennsylvania. You got that. You got 3% state. That's 40, and whatever the Medicaid. Let's say 40% on that, and you're saving, God, 40. So you make out about 20,000. It's not bad.
Yeah,
And then less whatever the fee the promoter needs. But you're
right.
talking some real cash after a while. There's that. There's just really a lot, and you have to be trained in the tax strategy space. I would say the godfather of it was Tax Coach for me.
Okay.
Tax Coach came along, I would say, in 2005 with Ed Lyon and Keith Van de Stat. They came up and they did their thing. Ed Lyon's not a CPA. Keith was a CPA. Ed was the guy who was outside the box. He had a background in insurance work. But he asked the kind of quote unquote stupid questions that people don't ask, and he asked those questions, and he just built this thing, Tax Coach. And then there's a spinoff, Certified Tax Coach came around with Dominique Molina a couple years after them, and now you got a a crap load of different uh, tax strategy businesses because, as you know, James, in economics, there's no such thing as a long-term monopoly.
No, right.
People hear how lucrative it is, and they start coming into the space.
That was the joke in the printer world that I had, was I could tell that I was making money because there's competition. And when I started to see that the competition was going away, like no one was entering the space, I'm like, oh,
That's right. That's right.
now we gotta look and see why aren't they entering the space? Why don't I have competition here?
That's right. That's right.
That's
Yeah.
interesting. I love it. Tell me about you mentioned, I guess, in the write up that I see here, the absence of systems. And I'm a big systems guy. My rule is to systematize everything,
Yeah, good.
especially in the call answering world.
Yep.
I did that in the printer repair world, other businesses that I've had. And I read Checklist Manifesto way back when, and I've tried to
Book
implement things like that.
is called Checklist Manifesto, the book.
Checklist Manifesto was written, I'm going to butcher the guy's name. So to him, I apologize. It's Arul Gurande or something like that. I
Okay.
believe he's a doctor.
Okay.
And what he had realized was that a lot of doctors are messing up. because it was all up here.
Yeah.
And they would just be like, "Ah, I've done the surgery a million times," and then they accidentally sew the person up with the scalpel inside their body,
Oh God.
or they cut off the wrong foot, or just mistakes were being made, malpractice suits were being filed, and they were quote unquote stupid mistakes. Things
Yeah.
like the doctor knows better.
Right.
If this were to come up on a test, they wouldn't answer it wrong, right? If the
Mhm.
chart says cut off the right foot, they cut off the right foot. But whatever. So he took education, I think, or inspiration from pilots. Pilots have all their checklists,
Yep. Yep.
and if they have, the right engine's out, you open up your book, or you look on your screen. It says these are the things that you have to do: cut off fuel, blah 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 blah. And so his argument in the book was essentially systematize everything using checklists because they're simple, they're easy to follow, and even if you think you know everything, you probably forget often.
Yeah.
So it's one of those things that I try to implement a lot of that in my business. Sometimes you get pushback from employees, but as a D, I just push harder. Right?
Yeah. It's probably fear from them too. They probably have a certain level of fear that they're going to
Yeah,
get.
yeah, maybe. I think all it takes really is one or two mistakes and you to be like, why'd you make them? Why did you transpose a phone number?
Right.
Right? Or why did you do this thing that is super obvious now, hindsight, that you made this mistake? You shouldn't have made this mistake.
Mhm.
You wouldn't have if you actually followed the process. Or other businesses that I guess we've helped a lot of businesses create systems, but there's many businesses, just owners that I come across, pure seat of the pants. That the word system isn't even in their vocabulary.
Yeah.
So
Yeah.
I guess I want to go back to you and tell me what have you seen as far as the absence of systems with some of the business owners that you've met or worked with?
I'll get to that in 1 second, James. But as soon as you mentioned that in terms of memorializing things, I think of the Rosetta Stone, right?
Yeah.
Where the heck would Western society, or the whole world actually be without that Rosetta Stone actually being transcribed or translated to understand what the hieroglyphics said, to understand all these different cultures? Where would we be if we didn't have that? So yeah, where we are. Thank God my son came in when he did. He came in and I had everything up here. It was just me. I hired some people during tax season, but it was just me, and I was just kind of I made enough money to put away a little bit of money, get away a couple times a year with my family, that kind of thing. But when he came in, I had issues with trust, right? So I'm like, I was very kind of felt a little funny about trusting a lot of people around all this information, all this data, kind of thing, personal information. So when he came in, one of the first things he did was to use Teams, right? So we already have Microsoft, the suite of Microsoft, and he just used Teams. I'm like, okay, I've seen Teams. I'm like, what do what is it for? My God, we use that thing all. It's the most beautiful thing to have is Teams. It's like an enterprise-wide texting service kind of thing. Well, you probably use it yourself, but it's a great thing to have. He came and did that, and I remember a couple years ago he said to me, he said, "Dad, the key is just like you said. The key is going to be systems." So we instituted this portal. We had a portal before, but this one was particularly for what we wanted to do in terms of growth. Instituted that, and in it, there's a little section called Wiki, right? So in the Wiki section, all these different things that I habitually do, because I'm moving out of production, right? So as I'm moving out of production, I'm memorializing all the work that I'm doing for, let's say, a particular client. I'm doing it on Loom, right? And Loom is, Loom, right? It's a screen capture software.
Mm-hmm.
I use Loom, and I think it's called Scribed. I want to say Scribed. It just takes a screenshot, like a click, 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 and says where you went. You went to Google. You typed in this at Citizens Bank. You went to the user login. You typed in this. So having both of those, and I would put them into Wiki, this is how to process ABC Company on a monthly basis. So Kerry then he sees it himself, he can share it with his team, and it makes things much more systematized. And he took over billing. He took over, and by the way, he's there was another framework that I'd used years ago. It was called Wealth Dynamics by Roger Hamilton. Not really sure if you ever heard of him.
I have not.
Yeah, all these personality metrics are based on the I Ching, right? The Chinese I Ching, which is the book of changes, right? Where it's got, metal, stone, cold, hot, wet,
Oh, sure.
dry,
Okay.
all that stuff. And it was translated by Carl Jung back in I think the 20s. And then from his translation came all the, Myers-Briggs, all these different personality things. And I lost my thought here for a second, but but going back to systems, just really putting together a template for how to get these things done, right? And so we use like my tech stack would be for the portals is TaxDome. We use TaxDome, and in TaxDome you have all these automations, right? So Mrs. Smith, we haven't received your information for tax returns, and you put it on a 3 day, 1 week, every other week kind of
Oh,
reminder.
so emails a reminder
Yeah, yeah, it goes
automatically.
out exactly, right? And so, whenever Mrs. Smith uploads it, I get an email. Mrs. Smith just uploaded something. Look in. Okay, she uploaded her W-2. Um, so that's yeah. So kind of jumping around here, but I meant to talk about Kerry for a second. He's a one of the metrics, personality metrics that we use was called Wealth Dynamics, and it had him located in a particular part of the square as a deal maker, right?
Oh, nice.
So he was much better. So I saw him as a better fit than I would be to Bill. He's just a better deal maker than I would be. And so I just gave that to him. And so I believe in who, not how. I don't have to, like I used to try to understand everything, right? And I was burned out. And then instead of just giving to somebody who knows how to do that thing, right? Or is better at it than you do. Temperamentally, they're better at it than you. Almost like they have a divining rod, like the old divining rods for you to find
Yeah, find the
water.
water.
Right. People like I have a particular divining rod with people, right? So I'm pretty good at it, right? With certain parts of that. And Carrie's just good at a deal. I mean, he's looked at me a couple times and said, Dad, are you kidding me? We're doing all this for them. You want to charge nothing for them? And I'm like, well, they're a legacy client. They've been around for a while. I'm not trying to, Dad, they're making $1 million a year. What are you talking? I think they can
Don't be afraid to
afford it,
charge.
right?
Yeah.
Right. I think they can afford it. So um, anyway, so that's yeah. So I hope I answered some part of that question.
Yeah, 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 absolutely. Um, what else do we have here? The lack of knowledge. We talked about absence of systems, no tax strategy plan. So as far as let's just say that I'm a business owner and I've had a CPA where I give them the shoebox or give them the QuickBooks file or something like that. Here's my P&L and balance sheet. Tell me what I owe. If I want to find a tax strategist, what are some things that I should look for to figure out if the person that I'm talking to that has CPA and all these alphabet soup after the name, how do I know that I'm talking to someone that's actually a tax strategist versus someone that's just going to enter the numbers and move on with their life?
Well, you can look. I mean, you can ask them very specifically, "Are you a tax strategist?" And if you are, where did you get your training? Right. So they're pretty. There's a newer vendor named Corvy that came into the space a couple of years ago, right? And Corvy, I've never used it, but it's supposed to be very good tax software. It's expensive, but it's a very good tax software. Um, but you want to get somebody who's got some real training. I don't know if Corvy has training or it's just a platform really. But I would say somebody who is a certified tax coach is somebody who's got training. I was a certified tax coach years ago, and I got training. I just didn't. I just I wasn't going to pay all the monthly stuff after about a year or so being in there because I had the knowledge. I don't have to be certified in it. Um, but you can ask them specifically, like, what kind of, tell me more about S corporations. Tell me about captive insurance companies. What do you know about captive insurance? Any tax strategist that's worth his or her salt would know about captive insurance companies,
I don't
right?
even know what that is. What is a captive insurance
Yeah,
company?
captive insurance company is a business that has their own insurance company, right? And there's a particular code section. I want to say 851 or something. I can't remember the exact code section. But the upshot, James, is that if you're, let's say, you're a corporation, and you got obviously risks in the corporation, you can get a what's called a captive insurance company, which is an insurance company specifically just for your operating corporation. You don't have to, it doesn't have to be open for the whole neighborhood. You can have that corporation, you have ABC Corp, and you can have ABC Captive Insurance Company, right? And the way it works is that, usually, well, the way it works is that the operating company pays an insurance premium to a policy in the captive insurance company, right? So the captive insurance company issues a policy for the operating company. And let's just say, I mean, you go through a whole vetting process, right? Where the underwriters, they vet you to see what your insurable risks are and so forth. Go through that whole underwriting process to come up with all these different risks that you have. And then let's say your policy premium, say $300,000. If you're at the top bracket, you're saving almost half of that, right? Because in taxes. So taxes would be, let's say, it's called $150,000 in taxes, but now because you have this captive insurance company, you've paid yourself 300,000 into the captive insurance company. You're not going to, at least you're not going to pay the 150. So the money goes into the captive insurance company, and guess what? The income that the captive insurance company has now is not taxable.
Oh,
I mean, I'm being kind of simplistic with it, but that's a general idea, right? It's not taxable. And you can build up that money in the captive insurance company and really have the captive attached to maybe some sophisticated financial planning with, maybe universal life insurance and that kind of thing. Have that at retirement at a very low tax rate, maybe a capital gains rate, 20% capital gains rate, which is better than 45%, or even 50% capital gains rates or income tax rates. So it allows you to squirrel away money. It allows you to migrate some of your other risks that you were paying directly to, you know, um, I don't know, whatever,
some
car
insurance
insurance,
company.
yeah, health insurance, all these other different insurance companies, you can bring them into the captive. Now, there's some captives, you do the captive and the, um, the health insurance is good enough, you'll leave that alone and so forth. But the idea is that you have a bona fide insurance company, um, that you can pay, right? It's past muster. One of the vendors that we use is called CIC Insurance. They're out of, I want to say, Tennessee, I think, Kentucky, Tennessee, whatever. They had taken their court case because the IRS had disclaimed their ability to have a captive insurance companies. They took their case to the Supreme Court and they won.
Nice.
So yeah, very nice. They won against the IRS at the Supreme Court level.
Wow.
So they're my vendor of choice when it comes to captive insurance companies for clients. But so you have that. So you have that. It's a very interesting, sophisticated tax strategy. Now, as you go along, James, you can stack these things up. So by themselves, okay, they're good. Depending on how much money you have, right? They're good. But when you stack them up, that's where you see the compounding of all these strategies coming together, and really saving you a lot of cash.
Then you're bringing down your total taxable income down to
Correct.
hopefully end up in a lower bracket.
Yep. Yep. Oh, yeah, you will. You will be on a lower bracket. I mean, you've got, 10, was it 10, 20, 25, 30, 32, 34, 5, 37. 37 is the top. And the idea is you want to scroll away as much. And usually we've sold captives. It usually happens around the third quarter, right? So it's around July, August. We're getting ready for doing a calculation conversation about the 915 payment, right? So the 915 payment's coming up. And so we have a preliminary conversation with them about it. And this is when they got sticker shock, especially new clients, right? New clients that we haven't had a cadence. Usually with ongoing clients, we've had, quarterly cadence. We know how much is going in 415, 615, 915, and 115 of the succeeding year. But the new clients, they're like new to this, right? They think this stuff is mysticism. And you grab their, because like when they first come on, you do a tax plan and you're putting out some of these things. Captive is one of them. It's like, okay, here's the thing. And they're like, that's, too rich for my blood right now. But then you come to the, to the quarterly tax conversation. Now all of a sudden they have ears to hear, right? Because now
Say, whoa, tell me about
yeah,
that again.
exactly. You're calculating their third quarter payment, and then you're extrapolating because they're going to ask you. You're extrapolating what their tax liability is going to be 415 of the succeeding year, and they get sticker shock. So you have them in the right place, right? And you say, well, hey, how about that captive I mentioned before? You want to talk about that? Then you have a conversation about that and conversation about more aggressive, legal, but more, I guess, exotic. When I say aggressive, most people you mention captives are like, what? Captive?
I've never
But
heard of that before.
yeah, captive insurance company. Yeah, as a matter of fact, if I get a chat, well, after this, I'll send it to you. I'll email to you.
Awesome. I
Yeah.
appreciate that. When you meet a typical business owner, and let's just say a business owner doing, let's just say 1 million in revenue to keep it easy number. And I'm going to broadly say any business. I guess we can take it a couple different directions. Let's say a service business, whether it's
Sure.
plumber or accountant, whatever. Are there some tax strategies that you commonly see they are not taking advantage of?
That's a very good question. Yeah, a lot of these tax strategies, most because the CPA, because a lot of CPAs don't do them. To your earlier point or question, or observation, James. Yeah, a lot of CPAs are check off the box CPAs, right?
Hmm.
And also a lot of the CPAs are baby boomer. They're like, I would say in the first or second quartile of the baby boomer generation. So they're all retiring and all that. And a lot of the young people are not coming into the space. It's a great space to be in, actually, if you're somebody who's trying to figure out what to do with their life. But but to answer your question, um, God, it's kind of uh, uh, I'm sorry, my mind went somewhere.
No, you're good. You're good. Just an example that I learned recently this past year was that I could pay my kid.
Yep,
So
yep.
I have a space, I have him
Oh yeah,
clean
yeah,
it.
yeah, yeah,
He
yeah.
helps me do stuff. And I asked my accountant, I'm like, because I learned about this on YouTube.
Sure, sure. That's right.
And I went to my accountant, I'm like, I can pay my kid. And he's like, yeah, you can pay your kid.
And you never told me.
And I'm like, I didn't just get a kid. Like I've had this guy for a while
That's
and he's
right.
been
That's right.
helping, but I was just like, whatever, he's helping because he's my kid.
That's right. That's
Like
right.
I got to give him some work ethic kind of thing.
Yeah,
Like,
and that's a
why
very
wasn't this like, oh, you
yeah.
own a business and a kid, therefore this is something you should look into? At
Okay,
least
yeah.
mention it.
Thanks for reminding me. Yeah, yeah. So yeah, so those, yeah, typically very few that I bumped into. I would say all the ones that I bumped into a bunch of them over the last couple of years, and it's like, you mentioned tax plans to them. They're like, huh, what? I mean, everybody knows about S corp, right? So everybody goes, oh, you elect an S corp, okay, and that's generally a good one. Although, if you're in the top tax bracket of 37% federal, and you know that the federal C Corp rate is 21%, right? And you're squirreling away a lot of money, I would say maybe take a look at the C Corp as a
Okay.
possible, so maybe you have the S Corp and then have a side C Corp management company or something, right? Um, but typically, no, it's like, I would say, so I've got, so e-commerce space. And a lot of these are newly blowing up, right? So the e-commerce space is a space that's really popping. People got Shopify, Amazon, they got TikTok, and they're just, blowing up.
Hmm.
Um, uh, until they see the pain or feel the pain of taxes, oftentimes they're not going to ask, right? So I've got a client who we're going to get more and more sophisticated on. It's a home care agency that she always nets over $1 million, and so it takes a lot of different strategies to bring it down. So we, try to bring it down as much as we can, but we have to get more and more sophisticated. I think the first year we did some basic things. I kind of redid her S corp because whoever did it before kind of screwed it up. So we redid that, and we did a couple other things. But typically, most people are not there. They're especially in the home care, like in a home care space. You're talking about a cohort of business owner that maybe say 6 years ago before COVID they were nurses making $80,000 a year. Now, 6 years later, they're making $800,000 a year net, right? EBITDA,
Hmm.
right? But a lot of them still have the mentality of when they were making 80,000.
Yeah, this is just a very complicated W-2 that I'm giving.
Right.
Right.
You know, and so, it's like, not all, obviously, not all, but yeah, but a lot of them still have the same mentality. I'll just take this H&R block and get it done. but that's after the fact. Why would you want to wait after the fact to do that? Get this thing before the horse runs out of the barn. Make sure that this thing is, because this is not mysticism. It really isn't. I mean, maybe CPAs sell it like it's mysticism, but it's not mysticism, right?
Right. I suppose
It
like the financial planners
yeah,
want to sell the retirement stuff. It's like, don't look at it. We got you.
we got you. Yeah, and then sometimes you realize they did get you, right?
Yeah, yeah. We'll take 2.5% every year, win or lose. But
That's right.
yeah, trust us.
That's right. But you can, to your point, I mean, we've got Google and look, just so you know, I don't think I'm breaking any kind of code here, but CPAs also Google things, right?
Well,
You
I
know,
bet, no doubt.
it's
Yeah,
a
you
quick,
can't possibly know it all.
yeah, and it's a
It's not even
quick,
physically possible.
right. It's a quick thing. It's a quick gopher, information gopher to use. Certainly Chat GPT is as well. And
Yeah.
it saves time and why not, right? To use. But yeah, I would say for any business, they should, like, we offer, somebody comes in to us, like they'll come in through a referral, they'll come in through Google or whatever, and we'll have a quick 15-minute call. Usually on the phone, I'll just talk to them on the phone, see if they're a fit. And if they're a fit, we go to a discovery call, right? And so they'll upload their last 3 years of tax returns. I'll gauge it. I'll take their tax return information, put it on a Google spreadsheet for, like, 24, 23, 22, run the numbers down, see if they make sense. And then if I see anything that just kind of calls out to me, like a ratio difference, like their gross profit ratio is at a particular number, right? Like their cost of goods or cost of sales is at a particular number, especially if I'm familiar with the industry, like a home care agency, for example, right? And then I'll ask them, I say, hey, look, this looks a little interesting here with the ratio here. Could you send me your accounting for that year? And then, they'll send it to me or they'll send me bank statements or whatever. We'll do kind of a quick and dirty number thing. And if we see anything, we say, let's dive into this. And invariably we'll find something and we just, we'll amend the return. So it doesn't, usually it's like law firms. I'm not to bring in lawyers with this, but or even doctors, because you're looking at, and usually these assessments are free. You look in and see what's there, and the worst that it can be is that you got somebody who's professional to look over for you, give you a thumbs up or give you a couple recommendations, and it's all good, right? And then, but then sometimes you hit like people putting PPP loans and top line revenue and other loans and so forth and top line revenue. It's like that's a mistake, you
Hmm.
know, and you can help people out doing that. But yeah, it's an under kind of an underserved kind of thing. It's becoming more popular now, and there are more CPAs that kind of coming into the space as much as they're coming into the tax strategy space because
Yeah.
yeah, yeah,
It's interesting you mentioned that a lot of CPAs are getting older. I lost CPA, two of them because of retirement. So it's one of those like, go find a, like, I'm retiring, I'm gonna be either selling the book of business to whoever or whatever.
yeah, yeah,
And both times I would consider it a blessing somewhat in disguise because you learn like, oh, if I go with this other CPA, they're actually a strategist and I didn't know at the time they can actually save me some money. And then part of you is looking back like, oh my God, what have I spent the past 15 years? Because I didn't
yeah,
know these things
right.
or my accountant didn't bring them up. Yeah.
We're in a space, James, as you already know, we're in a space. And look, whether whatever side of the political spectrum you or I or whatever are on, you hear about Doge, you hear about this, whether you like him. I got a friend who can't stand Elon, right? I mean, I don't dislike Elon Musk. I mean, he thinks he's a Nazi and all this guy. I don't know. I don't think he is, but but whatever that team is doing, finding all this stuff that they found, is like, my God, it's almost like pulling back a panel in your house and seeing all these termites, right? And you're
Yeah.
like, how long have these termites been here, right? How long has this stuff been here?
Don't like, I'll be the first to say no one has ever accused the government of being efficient.
That's right. That's
And I
right.
can tell you a really quick story firsthand where I got to see behind the curtain and it made me think a little bit. This is state. I had my printer repair company. I go to a state building and gotta fix this plotter. And so I got my tools and I'm taking this thing apart. And there's a guy whose desk is pretty close because this thing is just stuffed in some office. And I'm working on the thing and I'm just chatting this guy up because whatever, that's what you do. And within 10, 15 minutes, I got a crowd of 8 people around me just watching me at the state office. And at first, I was like, oh, these guys are curious. You know, they want to know what's going on. But then they got some side conversations going on that have nothing to do with their job. And I'm there for 45 minutes, and these guys are still around me.
Wow.
And so I'm the entertainer, right? And all I could think is, I know what I'm going to make on this job, right? Over the course of time, there's going to be a couple $100, probably something like that with parts and labor. And I'm guessing that the average wage in that state office is probably $60,000 to $80,000 a year. And so I was doing the math, thinking, okay, if we got 8 people making, let's say, 70 grand a year, sitting around for an hour watching this guy actually do the work, how much did that cost the taxpayers?
Wow.
And it made me kind of mad because I'm like, on top of that, you have better insurance than I have. You got pension, and you got
Yeah.
all this other, like, you're essentially a protected class, or you were a protected class as far as labor goes, making sure that you have a job. And this is probably in the neighborhood of 2012 when the economy was recovering from a rough time. And it made me just think, like, doesn't anybody miss you? Like, you're not at your desk or wherever it is that you should be. Should I mean, do you have something to do? Because this isn't your lunch break. This is just you hanging out and nobody's saying, "Hey guys, get back to work."
Right.
So, not to say that what is happening with Doge and all that kind of stuff is the right way or the wrong way. I
Hmm.
joked with people, and this was back then, that all you need to do is have the service guy, whether it's the fire extinguisher guy, the printer guy, somebody just walk in there. And once you start getting a crowd, you can be like, okay, it's obvious we don't need you guys.
That's right.
Like
Yeah.
if
Yeah.
you're like 5 minutes, whatever, you're cool. Right? I got to get back to work. But
So
that
yeah.
was, I swear to God, it was an hour that these guys are hovering around me until I fix the thing and move on with my life.
God. Yeah. It's like at that point, James, the jig is up. It's like you guys are really not necessary. It's
Right.
like,
Yeah.
it's
Going
a,
through and mopping up and saying the entire departments are no good, I think that's a little bit more aggressive than helpful.
yeah. Yeah. I agree. Yeah. It is.
But if you had, but I feel like if you did it, something kind of sniperish like that, where you're just like,
Yeah.
hey man, if you can hang out for an hour outside of lunch break, outside of your cigarette break or whatever, and nobody miss you. My wife's a teacher and she always joked where if you can go away and you don't need a substitute, like we don't need 12 people in HR.
That's right. That's right.
We can probably get away with one in a software program.
That's right. That's right. Yeah.
So,
Yeah.
yeah. Anyways, it's
Anyway,
interesting the wasted money everywhere, I guess,
I
but
know.
I got to pay for a little bit of that. I still do.
Yeah.
We all do, right?
We all do. We want to minimize how much we have to. Yeah. The more you see of that kind of waste, the more you really don't want to pay taxes. You really just
the
don't.
the
That's
curiosity, I guess, not to get too political here, but the curiosity for me is saving all this money. Does that mean that I'm going to get this huge tax break in the next year or two?
by
Or like, what is the return on that? Who gets that return? I guess.
of saving all the money from tax planning.
Mm-hmm.
Well, you
Of
could.
the let's just government cuts. Let's just say they chop
Oh, I
off
got
fifty
you. Yeah.
percent.
Yeah. Yeah.
Are they all of a sudden going to be like corporate tax rate is now 10%, highest tax bracket is now 20% or something like that? Or hey, no
Yeah.
more sales tax or something like that.
Well, I know they've been kicking around tax changes. I mean, I remember the national sales tax has been kicked around for decades now, and the Trump's got this external revenue service thing he wants to put together. He's kind of at war with the Federal Reserve, right? So he's at war with the Federal Reserve
Huge
now.
war. Yeah, yeah, yeah.
He's had in both administrations he's had a statue of Andrew Jackson behind his desk. Andrew Jackson was infamous for one thing, the Trail of Tears, and he was famous for another, getting rid of the central bank back in the 1800s. And so Trump was signaling that he was going to do the same thing in term, not the Trail of Tears, but uh,
Hope not that, not that.
for some people,
Yeah, it
getting
seems like
fired.
he's leading that way a little bit.
That's
Yeah,
right. Yeah, for some people, definitely, but certainly for the other, getting rid of the central bank, Federal Reserve, and he's been kicking around this whole idea of taxes. No tax on Social Security, which I think is honorable, right, for
fair,
elderly
totally fair.
people. and no taxes on tips and that kind of thing. He keeps referencing back when McKinley was around and how much money this country made in the late 1800s with tariffs. And a lot of people,
Oh,
a lot of
yeah.
the tariffs that he's doing, he's just matching tariffs that have been hitting this country for decades. You know,
Yeah, I got different thoughts on the tariffs thing. That's
yeah, yeah. I'm not an economist per se, but it's. I mean, a lot of businesses are reliant on foreign trade, that kind of thing. So we'll see what
I
happens.
think the whole world. I mean, there's
Yeah,
entire I look at even as an example, the camera that I have, the mount for the camera, the monitors, the computer, the microphone, the mounts for that. If all of a sudden that were to double in price or just not even be available
yeah,
or not be available next day or the 2 days that we're used to,
yeah.
like you're talking about going backwards from my point of view.
I hear you. I hear you. Yeah, it's
So, and
yeah.
I guess I've had conversations. I just went camping with some buddies and I was chatting with them. And I'm like, I feel that we as a country, like we have sweet ass life. We're doing so well. So, I mean, just seriously, we don't,
Can I quote you on that?
yeah, seriously, absolutely. Cause I've been to, I like to travel a lot and I've been to some places that were, broadly speaking on par or below. I have not been to any place that I can say this country is doing better than us.
Yeah,
When you look at infrastructure,
yeah,
utilities, stuff like that, you can say like, they're even. It's about on par. This is a lateral move, but I can't think of many. And that's not to say that I've covered the entire world.
sure, sure.
I can't think of any that I've been to where I'm just like, oh my gosh, they got it made in the shade here. Maybe they have a better view, but as far as infrastructure,
Yeah,
roads being decent. Right.
yeah,
I'm not going to say that our roads are great, especially in Wisconsin.
yeah,
Probably Pennsylvania, same thing. Like they exist,
yeah,
right? They're
yeah,
not just gravel or something
yeah,
like that. So when I say all that to say the country, we are doing pretty well. And I feel like it's up to us then to help the rest of the world get up to par as well. Otherwise, what are we doing? We're just having a sweet ass life at the expense of everyone else. It sounds like a
yeah.
terrible person.
Yeah, no, I hear you. No, I agree with you. I mean, to like the Peace Corps, I guess in the '60s, and some of those things that were done then, and I think some of the sentiment behind it, I would say, is the best of American culture.
Totally agree. Totally agree.
The best of American culture. Not to be under the thumb of tyranny. Those things are the best of American culture.
Mm-hmm.
Letting the little guy, get his feet and give him opportunity to grow. And, I mean, the guy's mother or father or whatever could have been cleaning up, after an elephant poop. I mean, elephant poop cleaner. And
Yeah.
then, they come to this country and he goes to Yale Medical School, becomes a top surgeon or something. It's very particular, typical about this country because we're a creedal country. If you, it's almost like, I want to, I kind of want to, well, so it's like we're a creedal country. Are you on with the same value system? Okay. We don't care what your father was or what your mother was, If you're on board with that and you can show that you can do that, then hey, you're one of us. And
Yeah.
that makes us very atypical from a lot of countries. I was raised in Switzerland when I was younger, right? So I was there for about 6 years. And in Switzerland, it's like, at least for men, it's like the father trains his son to do what he does. If he was
Ah, okay.
if he's an arborist, the son becomes. That's just the culture, right? And here it's like whatever your mother or father did doesn't matter. You can,
Right.
the son or daughter, they can come up and do whatever whatever they. And this is very strongly American sense.
Yeah,
Um,
this land of opportunity, or it's
Land of
supposed to be,
opportunity.
right? That's the
Yeah.
rumor.
Yeah, well, let me just say this too. That yeah, you're right. We've had it sweet since World War II, right? So we had
Oh my God, yeah.
after World War II, we had the Bretton Woods system, right? Pegged what, $35 to an ounce of gold, right? We went off of that in 1970, 71. I think Kissinger went off of that.
Mm-hmm.
But you always need suasion for something, right? So his suasion was to go to the Saudis and kind of like, I don't know what he told the Saudis, right? But just have the Saudis denominate all their trade in oil in US dollars. So you had a certain level of suasion then. The Saudis did not renew that, I think, about a year or 2 years ago. I think it was a renewal point a year or 2 years ago.
Oh, interesting.
So they haven't renewed that. So you've got that, you've got the BRICS, you got, Russia into BRICS and China and the BRICS system. The Russians were kicked off the SWIFT system 5, 10 years ago, I guess, or 6, 7 years ago, as a because they had gone into Ukraine, I think it was. They got kicked off of that, but they were able to, kind of pick it up with the Chinese and the BRICS. So yeah, it's very interesting times. Very interesting times. I think the saving grace, personally, I think the saving grace of this country is the Declaration of Independence,
Absolutely.
and the Constitution really is just the administrative form of the Declaration.
Hmm.
It's just the administration of the Declaration. But I think the Declaration of Independence, really putting out there the freedom of a human to pursue what he or she wants to pursue, I think
Yeah.
is huge as a country. That you had a bunch of guys sitting around, they did the Federalist Papers, you had the Cato Club, whatever it was called, and looking, 500,000 years, 2,000 years in history, looking
Genius.
out, how do we do this? How do we do this so we don't screw up like he'd screwed up or like she screwed up over there? How do we, like, no,
Checks and balances, right?
right, that I know
Yeah.
of, no other country's done that. So we really do have, and yeah, we've had some issues in this country, but I mean, I think the best of American culture is better than anybody else's, or very close to beating everybody else's culture. I won't
Yeah,
say
I would agree.
I don't want to say, I don't want to come off like that, but
No, I'm not coming off like an ass or anything,
yeah,
but
yeah, yeah.
I guess I look at immigration and I'm like, the concern that we should have is when people don't want to come into the country.
That's right.
Like when there's no one traveling by foot 2,000 miles to get here.
That's right.
Like now we have people that are trying to get here because land of opportunity. But when they stop and they're starting to get into a different country, we should be like, whoa, whoa, whoa. We're not that bad.
That's right. That's right. Yeah. Yeah.
I always feel like not to get too crass, but I'm reminded of Clinton with the whole Monica Lewinsky thing.
Oh my God. Yeah.
And I heard a stand-up comic and he's like, we got to be concerned when something like that can't happen because like, oh, he's only the president. Nobody cares. He holds no sway.
That's right. That's
But
that's
he
pretty
was
good.
able to do some things because it's actually a position of power.
That's right. That's right. Yeah.
So I'm like, and I joked with I got this group that I hang out with once a month. Quite a few of them lean pretty extreme right. And I was joking with them. This was 2021, 22 during pandemic-ish times, but not right at 20.
Sure. Sure.
We're having
Yeah.
such a hard time hiring people. You'd have these interviews scheduled and then you'd have no shows. And I'm like, we need to open that border up. Because I feel like if somebody walked 2,000 miles, they'd also show up to an interview.
You got that right.
And we
That's
got
right.
these people sitting on the couch getting all their money. They don't show up to interviews and they have a sweet ass life watching Netflix,
I
whatever.
know. I know.
So I'm like, they need competition
Man,
because all these
yeah.
employers are just like, we can't find people.
Yeah. Yeah. This is very interesting conversation. You're right. You're right. And yeah, land of opportunity. I mean, I know where we are in Pennsylvania, a lot of the construction guys are Mexican,
Oh, totally.
and so
Totally.
you've got these guys. When I lived in Switzerland, I remember the Italians were the construction guys in Switzerland,
Oh,
right?
interesting.
Where we were, yeah, back in the 60s.
All
But
right.
but yeah, here, yeah, and they get the knowledge. Like anything else, you do it for a while, you just get good at it.
Yeah.
You get all the distinctions at it and all that. So there's certainly, I mean, I've seen Mexican that hard workers, very hard
Incredibly hard
workers.
workers.
Yeah,
Yeah.
incredibly hard workers. And so hey, but I'm with you in terms of this is the land of opportunity. Absolutely.
Yeah.
It's
I
got
did
a
my
yeah.
basement drywalled a few years ago. And it was from a guy that I knew, just I knew his business, whatever. And I'm like, hey man, I got this small project, whatever is during pandemic. And he's like, yeah, no problem. He sends his manager. His manager brings I think it was a Mexican guy because he spoke Spanish to him. The guy that was in my basement that actually did the work. He's moving 12-foot wide sheets of sheetrock all on his own. He got that whole room sheetrocked. I think it was 4 hours.
Mhm.
And there were cuts and stuff like that. It wasn't just an easy rectangle.
Wow.
And I came downstairs just to offer him, like, I don't know if I had cookies or brownies or something like that, just to give him a break. He was already gone.
Wow.
And I'm like, I look around the basement and I was like, okay, if I would do this myself, I'd be here for the next 2 weeks. And I promise you, people would go in that basement and they'd be like, oh, did you do this yourself? Because,
Wow.
and this guy, I'm like, oh my God,
Yeah.
that is
Yeah.
incredible.
Yep.
And I got it for a song, right? It was dirt cheap. From my point of view, I guess from a cost, it was still there's a comma in the number. It wasn't like I paid $50,000.
Yeah. But relatively it was cheap.
Relative, and I'm like, there's no way. There's no way that someone making the money you or I are making
Mhm.
could do that for anything near what I would consider to be affordable.
Yeah. Yeah.
So I'm
Yeah.
like, I don't know, man. You get rid of people doing the roofs and the drywall and the electrician stuff and stuff like that. We're gonna
Yeah.
have a rough time. A house
Yeah.
is gonna all of a sudden cost $10 million to put up for some little shack.
Yeah. 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 Really. God.
So that I guess that's the one of the concerns that I have.
Yeah. No, I hear you. I hear you.
And you're also telling people, hey, this was a land of opportunity. Funny story. Get out.
That's right. That's right.
So,
Yeah. Yeah. I think, well, yeah. I mean, there's so many different, I mean, the cushy, the guy on the couch, I mean, he's going to be, and she maybe, but I would say more for young men. They got to get their act together because if they don't, I mean, all these guys coming over here, they see the opportunity and they're
hmm
hungry. They
yeah.
will, they will bypass the guy in a second, you know.
I
And
remember I
yeah,
used to deliver beer and you'd meet these guys in the back of restaurants. So we'd deliver beer early in the morning. And so it was all typically it was Mexicans that were doing all the prep. And they're playing their Mexican music and all this kind of stuff
yep,
and say, hey man, blah, 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 blah. And just conversations with them, they talk about sending money back home.
yeah,
And I'm like, you're making $8 an hour. How much are you sending back home and you're still able to live here?
that's right, that's right,
Because like I'm making, I don't know what I was making, probably $11 an hour at the time there. And I'm like, that was hand to mouth paying rent in my 1 bedroom apartment.
right, right, yeah,
How are you guys? So I guess that's why you learn like they're living 50 in a house kind of thing because they
that's
have
right,
to because they want to send money back home.
yep, yep,
But
yep,
it's not like they're making $1 million a year and then sending money back home.
right, right.
Making peanuts and sending it back home.
Yeah, yeah, yeah,
But I'm
yeah.
sorry, I interrupted you. I'm sorry about that.
No, 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 no. It's all good. No, no, it's interesting. If we're getting into taxes. We're getting into micro and macroeconomics. This is pretty cool.
Yeah,
I'm really
there's
enjoying
the
this.
yeah, there's certainly things that I don't understand. You mentioned the central bank and stuff like that. Is it
Yeah,
Jerome Powell?
Jerome Powell. Yeah.
I can imagine if I was him, oh my God. Like there's absolutely no decision you can make that you won't piss off somebody.
So yeah, that's true. That's
I
true.
mean, raise rates, lower rates, don't do anything. So kudos to him for just being alive.
Being alive. That's true. That's true. He's getting it from all sides.
Yeah,
Yeah,
and
he's getting it
I
from all
mean
sides.
unprecedented as far as the height of the tariffs, the volume of
Mm-hmm.
them,
Mm-hmm.
and then just how it's changing every day, and you're meeting quarterly to be.
Yeah.
It's just like
Um,
I don't know what we should do. Right? I have no idea what kind of whiteboard they have where they're trying to figure out what numbers they're putting on there to figure out what's going on.
yeah. I mean, I get the sense that Trump's kind of shaking the tree to see what happens. A lot of it.
No doubt, no doubt.
And I know, and I haven't seen the numbers, but I know a lot of countries are trying to repatriate some industry back here. But I don't know. I mean, you know,
So what do you? The curious thing for me, because I'm, I guess I don't understand exactly what it takes to put up a manufacturing plant, but I know that it's not a light switch.
no, no,
Like
no,
you're
no,
not
no.
just like we need
Yeah,
automotive thing, whatever in Pennsylvania,
yeah,
and they built some 50,000 square foot. I don't know, maybe 100. I don't know how big an automotive plant is, but it's huge.
yeah, yeah,
Let's say 200,000 square foot plant or 200,000 square foot chip manufacturer or something
yeah,
of that
yeah.
nature.
Yep.
Like that's huge infrastructure, huge investment, capital investment and land, and the locality's got to figure out tax breaks so you come here and all that kind of stuff. So many moving parts.
Yeah.
How, and that's going to be years in the making.
Yeah, I haven't seen. I know Trump was talking about giving special credits and incentives tax wise for domestic manufacturers. I know he was trying to do that. But to your point, yeah, I mean, you know, it's the whole globalism retrenchment, right? Or not
Yeah,
retrenchment, but a receding of the globalism impetus, right?
yeah,
So, but yeah, but you got a lot of cheap goods, right? A lot of cheap goods from it was cheaper to make them over there, put them on one of those huge ships, bring them over here. It's still much cheaper than it was over here. So, we'll see. I mean,
yeah. The other thing that we have that many other countries don't is the whole union thing.
yeah,
So I think of when UAW got all excited. Was that last year, 2 years ago? And
yeah,
who was the head of UAW? And he's just like, "Oh, everybody strike!" And
okay.
huge shutdowns for Ford and huge shut. I think Dodge was or Chrysler, whatever,
All right, so yeah,
where he was leveraging tens of thousands of employees to just not go to work. I'm like, do they have that in China? I don't know.
yeah. Yeah, they kind of
To be
shoot
like,
with
we
each
moved our
other.
plant here, but no employees are working because they don't like the, I don't know, the Twinkies in the break room or something like that.
Yeah, they don't have unions, I don't think, in China.
All right. So
They
it's
don't.
just stuff like that where it's not, I guess there's labor cost, it's regulation, it's all this other stuff that they're not going to these other countries because they're like, we really like the US, but you know what? We're obligated. It's like, oh, it's way cheaper to go over here.
Oh yeah, oh yeah, huge, huge. Yeah, I guess as Americans, American culture, uh, we need to go back. I would say just go back to our best. Um, like I guess in the 40s, 50s, 30s, whatever, with just the algorithm of like real progress. Like
Yeah.
real progress and having the correct algorithm. Countries mimicked us, and it's interesting.
I think
Yeah,
50s after World War II, when we
yeah,
were more unified,
yep,
and you're like, okay, we lived.
that's right. Yeah,
We lived now, uh, and we had a lot of people that were employed because you had soldiers over there and you had money flowing,
yeah,
and it was kind of a new world order
yep,
kind of thing. So we're like, okay, we're cool. What now? And then like travel becomes a thing and computers become a thing and all that like way fast ramp up. People could get their own house. It
that's
was
right.
cool.
Yeah,
Yeah, stereos, radios, shows, whatever. Yeah, that was a, and I feel like we were unified then in more like we survived.
yeah, yeah, exactly. Yeah, we fought a two-front war. It was incredible, right?
Yeah.
And
Yes, sir. I can't imagine living in 39, being I don't know, being a 20-year-old guy in 39
yeah, yeah, yeah,
and just coming back in 45 and thinking like, okay, um, what
yeah,
now?
yeah. The greatest generation, right? Or yeah, the greatest generation.
Yeah.
And that yeah, yeah, it's incredible. I mean, the two-front war. That's and just that capacity that was able to be organized because of what was at stake.
Hmm.
And people said, well, FDR might have known about the Pearl Harbor. Who knows? But certainly having all that going on and people just having to really, work together and in the meantime realizing what a juggernaut of capacity we had as a country. It's like,
Oh, surreal.
yeah,
It
it's like,
still blows my mind
yeah.
that a country the size of Germany, so essentially the size of probably Pennsylvania, like if Pennsylvania is like, we're taking over the world, the rest of the US would be like, sit down. Right? But Germany's like, no, we're doing it. And they actually came pretty close. That
Yeah,
blows my
yeah.
mind.
Yeah, a
Blows my
lot of
mind.
it talking about temperament is German culture. German culture is fascinating. I think I was going to say them in India, um, but they were able to stop Caesar for a while. I don't know if
Mhm.
I think he penetrated the Rhine, but the type of people that Germany was the Teutonies and a couple other big tribes in Germany just had a certain kind of temperament. They're like, hey man,
Not
and
today.
what's that?
Not that like Germany is just telling Rome, essentially.
yeah. Germany is. I think Germany was hit. I mean, it was interesting with Germany because in World War One, Germany actually won the war, right?
Hmm.
And then England forestalled it to bring the Americans in, and Germany actually ended up losing it. But it's the it's the German people. It's their actual, and we don't really talk about it. Some people say, oh, you shouldn't say that, whatever. But the Germans in their culture have a particular algorithm of being. They have an algorithm of being that wherever they are on the planet, you can recognize them because they have a particular algorithm of being. They have particular tendencies that make them very good entrepreneurs,
Hmm.
very good business owners. And I think that's just universal that they're that good as a culture. And they were always a thorn in the side of the British, you know.
Hmm.
And God, they were always the juggernaut and they still are to this day. I think the juggernaut of the European economics. I mean, they were hard workers and the whole nine. So
Yeah, wasn't that 2008 when the rest of Europe was having a really bad day and Germany's like, didn't you save?
didn't you save? Come on.
Greece is like, hey guys, little help here.
Exactly.
Yeah,
Exactly. So yeah.
interesting. I got a little ending that I have to say here for the podcast.
Yeah, yeah.
Boy, we got off a sidetrack.
I know we did. It was interesting. It was interesting.
Oh, I love it. I love it. Dean, I really appreciate you being on the show, though. This has been
Thank you,
great.
James. Thank you. Great. Had a great time.
I gotta say, I've interviewed, I'm gonna call it a lot of accountants. And normally I would think accountants are pretty boring, but the accountants you included, the ones that I've interviewed, are fantastic.
Yeah, thank you.
So thank you for that.
Thank you.
I don't know. I guess, I don't know. Maybe you guys are closet partiers or something like that, and the rest of the world just didn't even know about
uh,
it. Who
well,
knew?
I'm an inductive accountant. Most accountants are deductive, so they work in the box. I'm kind of outside the box, which I had an identity crisis when I was younger about it until I
All right.
started meeting these very successful owners. I remember I talked to this one guy, Craig. He's a CPA up in New York, and he says you hire those people, Dean. You don't have to do that crunching yourself, right? That's what you hire for. And
Smart man.
yeah, 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 and
It was just that I imagine it was that one little chunk of advice or mention, right? And all of a sudden that just changed the direction, like, whoa.
yeah. I mean, because it was that, and in that was like the whole 80/20 rule, right? That I just kind of gave up the 80%, just focused on the 20, and hire people. I mean, it's like I had to just have my own process of you're hiring an adult who's got a mind, who can think. They probably have children, so they're responsible. It's like, you know, you don't have to hold their hand. They're
Hmm.
an adult, they can think, and just tell them what you want and they'll get it done. And if they don't, tell them thank you, but find somebody else.
Yeah, we're not a good fit. Take a walk.
Yeah. And it's not, if they're not a good fit, it's not bad. It's like if I'm wearing, size 7 shoes, I can't wear size 7 shoes. Now my feet are not bad. Size 7 shoes are not bad. It's just not a fit. It's not a crime. It's just, things aren't fit. Okay, that's fine.
I
But
love that analogy. That's great.
yeah,
I'm gonna have to use that. That's great. Huh. Cool. Well, Dean, thank you so much for being on the show.
thank you, James. Had a great time. Had a wonderful time.
Yeah, this has been Authentic Business Adventures, the business program that brings you the struggles, stories, and triumphant successes of business owners across the land. My name is James Cademan, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur in all of us, available wherever fine books are sold. If you're listening or watching this on the web, if you could do us a huge favor, give it a big old thumbs up, subscribe, and of course, share it with your entrepreneurial friends, especially those that learn that they have to pay taxes and maybe they don't want to pay as much. Dean, I never asked you, where can people find you?
Oh God, you can find me. Well, DeanVanceCPA.com. You can go there. LinkedIn, Dean Vance CPA. Instagram, Dean Vance CPA. I don't know if I have got TikTok yet or still have it, but yeah, you can find me, Dean Vance CPA, Vance and Associates CPA. Yeah.
Awesome. I love it.
Great.
We'd like to thank you, our wonderful listeners, as well as our guest, Dean Vance of Vance and Associates CPA. Past episodes can be found morning, noon, and night at the podcast link, found at drawincustomers.com. Thank you for joining us. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.